In the meantime, the market opened today under pressure, mostly from comments from the Federal Reserve Vice Chairman Stanley Fischer that the Fed's work is just about done, saying, quote, "We're close to our targets." This was at the Aspen Institute. This is a gathering ahead of that big Jackson Hole event on Friday. This kind of telegraphing is actually meant to assuage the street so no one can claim that they're caught flat-footed. Fischer is making the assumption that GDP growth is going to pick up this quarter in particular, and also in part because businesses are going to start to invest again. Stanley Fischer, who is perhaps the most highly regarded central banker in the world, also took an indirect shot at the White House, admitting that monetary policy isn't equipped to boost productivity growth. He said instead that falls under the purview of fiscal and regulatory politics. He went on to say that the government should improve public infrastructure, have better education, and also more incentives for private investment. 15% tax might be that. Now, this has been a complaint, by the way, from the Fed for a long time. But there's one that they're limited in articulating. They can't go against the president too often. Now, some argue, though, that the Fed is just making an excuse because it hasn't stoked that virtuous cycle in spite of these extraordinary actions like printing, I don't know, $4 trillion in cash and only helping a sliver of the population. Others agree the Fed is the only reason this economy has survived, and maybe a more business-friendly federal government was the missing link that's resulted in the worst post-recession recovery ever. As it stands right now, the street is prepared for a rate hike in December. The question is whether it be 25 or 50 basis points. 2016 Fed rate probability right now, September 18%, November 23%, and December is 40% for 25 and more, even for a 50 basis point hike. So either way, the street looking for something after the election. Meanwhile, those that didn't watch the market, probably if you look, you'll think it was a lazy session that barely saw stocks move. But the major indices were all over the place. And on that note, it's somewhat impressive, I got to tell you, that the indices held up. We had a sharp drop in oil, 3%, and of course, talk of rate hikes. The big news of the day was the $14 billion acquisition of Medivation by Pfizer. Biotech stocks, by the way, still down for the year, so look for additional deals. What's for tomorrow? New homes, that's going to set your tone. Remember, the housing recovery has been one of the more positive highlights of this economy, so that number better be big in the morning.